We've got Mark Fenton here with us, and he's going to be chatting about the most reliable trades for this market condition. Always appreciate Mark's insight. Mark, how you doing, bud?
I'm doing great, Johnny.
Good to hear your
And we're
voice.
starting that 3K class next week, right?
We're starting a 3K class next week. Yep. And then a short-term trading class the week after that. We'll dive into that in a little bit. Mark and Dan both contribute to that, to both of those classes, actually. Looking forward to starting those again.
Yes. And I just want to talk a little bit. I'm going to talk a little bit about the 3K class because, hey, you know what that is? That's putting the best trades on for the best situation. That's what we try to do there. So we have a 3K class. That's short for make 3K with 25K a month. Do you need 25K to take the class? Absolutely not. In fact, what we're going to do is just educate you at this class on strategies that you can use to try to grind out a consistent income from the market. We just call it that because we believe a person can do that if they follow the right plan and they stick with it and get control of their emotions. This is what we think can get done. No, yeah, there won't be any video until I'm talking a little bit about the class, and then I will share my screen. Okay. You won't be seeing me, Richard. I'm going to spare you that today. That seeing me. Other than that, picture.
He's got a lovely photograph. Yeah, I'd say he's got a lovely photograph of you, Mark.
Yes, that is 2019. That's the beautiful Dragonbach Mountains in South Africa behind me. And not much has improved for me in the last 3 years, is 4 years, as far as my appearance. I always say that time heals all wounds, but it's a poor beautician. So it doesn't do much for you. Anyway, that's what we try to do with that class. We try to meet Tuesday, Thursday, and look around at the market and see what we think is best in the market to do some reliable trading. So I'm going to talk about one of those types of trades today and a little bit about the setup. But we do different things in here. We do flies, we do calendars, we do diagonals, we do double diagonals. We even do some earnings plays once in a while, but generally the focus will be grinding out a monthly income. All right, so let me start out by saying this. Part of this class is to educate you on what to be aware of in the market. Well, because this market has been totally driven up based on cheap money from the Fed that companies then use to buy back their own stocks, enriching themselves, driving up the stock price, nothing to do with value. But since everything in the stock market revolves around cheap money from the Fed, the fact that Fed and how much money how cheap they're going to make it, or now we're in this tightening cycle. So there's all this angst in the market about how far they're going to raise rates. So the Fed's primary focus in raising rates is to try to get inflation down. Went up to a 40-year high. It's tacked down some, but still not down where they want it to be. So they're still in a tightening mode, which they keep telling the market, hey, we raise rates, we're going to keep raising rates. The market refuses to accept it a lot of times, and they keep thinking they're going to quit. I don't look for the Fed to even stop with raising rates to probably second or third quarter. And as far as cutting them, I don't think it'll be this year. But I say all that to say this. Certain things you have to be aware of in the market just to let you know that the market can move. That doesn't mean you can't trade, but it lets you know, hey, Tuesday, this coming Tuesday, for instance, the consumer price index, which is really, that's what inflation is. That's what the market will look at and then try to discern from that what the Fed's point of view will be about it. Generally speaking, the market would like inflation to go down, so the Fed feels like, hey, we're getting our job done, don't need to raise rates or not as much. Anything where inflation would actually not go down or go up, the market won't look at that very favorably. So we need to just be aware of that, and we do keep those things in mind. Fed announcements of any kind, CPI, probably two of the most important things. If you don't get anything out of today's webinar, take that with you. That's the news to watch right now if you want to see what market moving news is the most important. So now I'm going to share my screen again, and I'm going to talk about a trade. Now this is a trade we can put on that I prefer to put on when the VIX is around 20, but we're going to look at it today even though it's at 21, because if nothing else, you have the strategy in your back pocket. And maybe you want to wait till after that CPI announcement to put it on, even just in case there is a big move, then you can get in. But I'm going to talk about this trade, and it's called a double long diagonal. Now, some of you may have been around in a community or listened to Sheridan Mentoring enough to know that we done double diagonals a lot over the years. Well, I personally don't do the ones we used to do at all. And that one was one where the shorts were closer to where we're trading than the longs. So it was sort of like an iron condor, except the longs in a different date. I have discovered and prefer over the last few months, and it has been working well for me and for my students, people in the community. And that is where you put the long closer to where we're trading and the short further out. And it makes it much easier to fix if you have to fix it. So let's take a look at one. Now I have one model here. I don't know that that's the right strikes. I put that up beforehand. I'm going to take it as an individual, two individual diagonals. So we're trading here at 40.80. So a lot of times what I like to do is go up 30, 40 points, sometimes even a little more, and down on the other side. But first we'll go up to the 24th. I don't want to put on anything that expires next week because there could be very large movement next week. And if you needed to repair your trade, it'd be a little tough, seeing as that CPI comes out Tuesday, expiration would be Friday. So let's go out to 2 weeks from today, the 24th of February. And if we're trading at 40.80, let's go up to maybe 41.20. And we're going to buy a diagonal up there. So we're going to buy the 41.20. And on the call side, I'm only going to make it 5 points wide. We'll talk about that. So, and we're going to sell the 41.25. So buy the 41.20, February 27th, and sell the 41.25, February 24th call. Now let's go over on the put side. Maybe we could do the same thing. Maybe we'll go down to, say, 40.40. And we'll buy a diagonal, meaning we'll buy the February 27th, 40.40. And we're going to sell the February 24th, 40.30. We're going to make it 10 points wide on that side. Now let's take a look at what this looks like. Look how wide it is. Now, here's what happens if we do 10 points on the call side. So just keep an eye right over here. And if I do 10 on each side, you see how it gets a little nastier over here on the, if it does go down, see how we're dropping below zero. So that's the reason that if I only go 5 points wide, now look, it hugs along the zero line. And true enough, this is a long Vega trade, meaning that if volatility goes up in your favor, that will help you. And that will probably happen if we go down here. So this probably would make even more money than what it says down here, because being a long Vega trade, it will swell up if volatility works for us. It will shrink if volatility works against us. But what do we have here with this trade? Let's take a look. We are very wide. In fact, we go from 4,200 at one break even down to 39.20. Folks, that's in the area of a 300-point width, is it not? So let's take a look at something else you can use just to inform yourself. So for February 24th, we have out here what they call the market maker expected move, which is plus or minus $136. Now that's given price action, what market makers are predicting they think a larger end move would be. They can be wrong. It can not move at all. It can move 200 points. But we have found it's fairly reliable to, count on something in that range. If it does move, it can get away from you, or it may lay there. However, so basically 140 points. And we don't care if it lays here. What if they're wrong and it doesn't move? Well, that's beautiful for us because we're taking in theta, $59 a day. And by the way, every day this is on, that number will get bigger because options don't expire in a linear fashion. They expire much faster, like boom, in the end of their life, the last 2 weeks, they just fall right off the table. So you'll see that number accelerate. but that's really what we're after, is that positive theta. Because if we put this trade on here, and here, let's make sure you could put it on as two individuals, or we could put it on all as one double diagonal. Let's make sure I have all these same strikes. 20, let's see, 20, 25, 40, 30. It is great. All right, so this is if you put it on all at once. You could do it either way. Sometimes with a four-legged trade like this, you might have a little more trouble getting a fill at the mid price. You might have to give in a little more than on this one, although this is no guarantee you won't have to give in a little either. But it's a two lot on each side. You can put it in, boom, put it in, boom. Or you can enter and exit this way. So if we spend $1,050 on this, roughly, that's correct, Dennis. So if we wanted 10%, maybe cover our fees, maybe we'll look for $120, right? Because it'd be just over 100, maybe 104, 105 to cover the costs, some fees. So what if we were looking for $120 and then we'll get out? Well, let's just go ahead in time and see how long it could take us just to get to $120, just based on theta, nothing to do with what volatility may do to us. So look at our P&L open right here. And lo and behold, look at this. You could have 10% by Monday or Tuesday, just based on pure theta. Now, is that going to happen for sure? Well, you can't say that for sure, because the way we make or lose money in one of our trades is there's three components. How many days have passed? How much theta have you taken in? That's always a positive for you. Also, how has it moved in the graph? You can see when I move my mouse across this graph that at different points in the graph, you're making different amounts of money. So that's a factor. And then lastly is Vega. How did volatility changes in our options affect us? Those are the reasons you're up or down in one of these trades. But you could be out of this by next week sometime fairly easily, especially if you could get through that CPI notice. Maybe it doesn't do much. You could be out of it. I don't think that you have to get out before CPI, Bob. I would say this: if you happen to put this on today, and I don't recommend anybody does it live unless you've traded it a bunch paper and know exactly what you're doing. This isn't a trade you just slap on mindlessly. You have to know what you're doing with it. But it's a strategy I wanted to acquaint you with. But if you had a profit next Monday afternoon and you wanted to take it off at a profit, I guess you could consider it before that Tuesday morning CPI. But I don't think that you have to. One of the reasons I selected, the main reason that I selected going out to the 24th, is so that if it did move a lot, we could still adjust this trade if we needed. So that's kind of covered in that, but we'll have to see. So anyway, we said it could be almost a 140-point move. So if we're at 40.80, 120 points, that would be, I guess, 42.20. And we almost had that entire graph covered. On the downside, it would be what? Down to about let's see, all the way down to 80, and then another 40, so that'd be 39.40. And we're right in the ballpark there, aren't we? Right in the ballpark. So this trade can really stand most of that move if it does get that kind of a move on, and then you could always adjust it. It's just a primary, I'm just going to go over one adjustment, folks. And that is if you get running up in here and you're, maybe halfway between this short strike and here, you see the slope. If you get down in here, maybe just take the put side off, right? Because then if I take the put side off and hold on, I got to have them both on here. Okay. If I just take the put side off when I'm up here, say 41.60, now I'm fine again, right? So you just close that, try to recoup any loss plus some kind of profit. And if we ran down, same story. If we got down 39.80, something like that, you'd take off the call side, there you'd be. But this is the kind of thing that we show at the 3K class, depending on environment. Like I said, I normally like to do this with the VIX under 20, but I'm showing it today as a strategy, even though the VIX is 21, and some change. It doesn't mean when the volatility is higher, this trade couldn't work because it's so good, but it's all about how well it holds its volatility, right? Because the volatility went higher from here, this trade would be fine generally. If it went down, not so pretty. Or just take off a few contracts. Okay, so B says he might do that. All right, whatever, B. Of course, whatever size you do this, you can do this in SPY also. And it is a great trade for our current market environment in general, if of course you understand it and understand how it works and how to use it. This is what you can expect in our 3K class. A whole lot more of this, kind of helping you, guide you through with educational tools to help you pick the best strategies for yourself, your account, your risk temperament, your experience. And we just show ideas that you can learn. Will just says, when would you say put the put side back on? That's a little deep for this, just a free webinar. Will, I'm not going into that. I did show the one adjustment. That's as far as I'm going to take it today, because there's a lot of things to consider, a lot of moving parts, not something I'd want to do at a free webinar. I'm just wanted to really, with this, just show you folks the kind of trades that we can set up. And there's a lot of different ones for different reasons. And we educate you on why you might consider some things more than others. If we have any, Mark, I have heard you say you don't usually put on income trades on Fridays. Well, you have? Okay. Generally speaking, I'm not a big into that. This is a webinar. I'm educating. I'm not recommending anyone, absolutely not recommending anyone put on this trade today. No one. Okay. And you should know what you're doing, know the insides and outs of it. This is an educational seminar showing you a strategy. That's all it is. Not meant to infer for you to run out and put this trade on today. That'd be a bad idea for most people if they don't know what they're doing in particular. Do it on paper. Yeah, if you want to set this up in your brokerage platform like this, and maybe you can do a paper trade in a paper trading platform, or on Thinkorswim, you can do that, or you can just lock the mid price. It'll be sort of like you got filled there if you don't unlock it, and you can see what happens. Okay. Another topic for another day, Subra. That's another thing that you could come to the 3K class, and we'll talk about when back ratios might be appropriate. Okay. Any other questions just on the double diagonal or the 3K class? Be happy to talk about that. Before we go, I'll take a question or two. Not anything, we're not going to do anything at length, because we really just wanted to acquaint you with what we're doing over here every day at Sheridan Mentoring. And we have a lot of different programs. Not only do we have 3K class, we have the short-term class, and we have, if you join up, we have an opening bell that I host every morning, 30 minutes before the market opens, where I just talk about, hey, what's going on in the market that day, what happened overnight, things you might think about. And then Dan and I have traders lounges where we also go over what trades are working that day, show things, go over things, as well as the key to everything we do, one-on-one mentoring, where you would meet with just Dan or I in a Zoom meeting room one-on-one, and we dive into things specifically for you that fit you and your style, account, temperament, experience, and help you get up and running without any other noise from other people in the room, just the two of us. No, there's different programs. Check with John in our office, who started this today, on what package does what for you. Okay. I believe that's a separate package than the 3K, but John is the man to talk to. Oh, look at that. He brings it.
Well, I thought it was a beautiful transition here. Yeah. You know what? There's a couple different things you can check out. If you want to check out the new 3K class that Mark's talking about, if you just come to SheridanMentoring.com, I'll point you to a couple of things here. One of which is you can click on this 3K banner and learn a little bit more about the class. But this is one of the reasons I was appreciative of Mark sharing today. You can get a little perspective of exactly how the 3K class works. Even right now, you got 20 minutes with Mark. You can come to this class page now and get another 10 minutes of Dan giving a little bit of his perspective. Each class, Tuesday and Thursday, you're going to hear from Dan and Mark, which is only a benefit to you guys. So definitely come check out Dan's little sharing of his perspective on the 3K starting on February the 14th. Then back at the homepage, a couple other things just to check out. You can take a look at our programs here. This is going to give you a little bit deeper idea of kind of what's involved on a daily basis here. And as Mark said, for $49, you can trial 1 month of our Opening Bell, our Traders Lounge and Help Desk. It's Mark and Dan teaching in Zoom rooms, just like we're in now. We record and archive this content so you can go back and review it. So definitely encourage you to come check out the Our Programs page. And then for sure, come take a look at the testimonials in the top right. This is just simply the opportunity to hear from folks just like yourself who are option traders, who have found some benefit from some education here with us. You can hear from them here. There's some nice videos, and you can read a little bit about what they have to say as well. And of course, any questions you have, you can jump into the live chat with me or reach out 800-288-9341. All of us are really easy to get a hold of by email. It's our first name, John, Mark, Dan, Jay at SheridanMentoring.com. I appreciate Mark sharing today.
Hey, Jen, I'm going to take a couple of these questions and then
and to say if there's any questions, I see a couple there, so go ahead.
And we're going to wrap it up. So we're going to wrap it here, folks, here, but I'm going to just cover a couple of things. One, 3-day time spreads, any advantage to go longer than 5 dentists. That's a great topic for the 3K class or one of the Opening Bells or Traders Lounges. Get with the program, and that's the kind of thing we'll go over. And Mark, how much do you need to trade all the trades in 3K? Well, you can do this with different amounts. You can use SPY and trade much smaller. You could always trade paper also, or maybe use SPY once you get up and running and just start out trading with a few $100, just as you learn the ropes and get where you're at. But that's to answer that. Now, one other thing I just want to go over where I came from. I've been mentoring here at Sheridan Mentoring since 2007. I went through the program myself in 2005. I was towards the end of a 23-year paramedic career. I was trading a lot because I worked these 24-hour shifts, so I was off most days of the month. So I was almost really a full-time trader. And in 2005, I said, you know what? I'm kind of listless. I've done futures, options, stocks, all these things, tech booms, penny stocks. And I never was real consistent. So I decided to get some education. I went through this program with Dan. It changed my trading life. Worked really well for me. By 2007, I was mentoring, helping out part-time. And then I retired from my job in 2008, and I became a full-time trader, and I still help out here with mentoring. And I've been doing it ever since. So what I'm saying to you is I've come from the retail side, just like most or all of you. I didn't come from the floor. Many times that can have totally different dynamics. But when you're a retail trader teaching retail traders, you know exactly what they're going through. And that's how I got to where I am today. And I often think that my paramedic career informs my ability to be a trader because you learn to take emotion out of things. That's part of being a paramedic, is following a system and tuning out the literal noise and everything else that goes around that can affect your emotions, your thoughts. And the same thing with trading. You've got to tune out fear and greed. So that's that, folks. I hope you enjoyed this free webinar. I hope you enjoyed how I presented this. Maybe, build that trade up, take a look at it on paper and see what you can do with it. And we'd love to have you in our community, in our 3K class, short-term class, Opening Bells, one-on-one mentoring. We'd love to have you. Any questions on that, contact John in our office, john@SheridanMentoring.com. And you can also contact me with general questions, not the questions on packages. That's John. I don't even know. I'm not a salesman, but that's Mark and ARK at SheridanMentoring.com. So thanks, Johnny. That's what I got. Want to wrap it up here?
Yeah, I appreciate it, Mark. Appreciate you sharing today. Like you said, any questions, you know how to reach out to us, folks. And we'll see you again soon for some more education here at Sheridan Mentoring.
Have a good one. Hey,
thanks.
And go Chiefs. See you later. Bye.
Bye.